In this class, we are solving a question from the West African Examination Council test or exam for May, June 2000, question 9. You can take the full class on the topic by visiting jadosconsulting.com, okay, to have a view or take a class that gives a complete teaching on the topic. You can as well buy my textbook, where you can also read on the topic in full and solve some other questions. One copy is 7,000 or $12 US basically, and then you can as well gift someone for 6,500 naira or 11.5 US dollars. So let's take the question. Again, it's WAEC May, June 2000, question 9 on bank reconciliation statement. It reads, say, T. Emeka maintains a business bank account with Second Bank Nigeria Limited. The bank statement received for the month of March 1999 showed a balance of 14,265 naira to his credit, while according to his cash book, he should be having 13,380 naira. Subsequent investigation revealed the following. A. Two checks, A00111 for 3,400 and X222419 for 6,000 naira deposited to the bank on 28 March 1999 were not credited by the bank until 2nd April 1999. B. A check for 6,500 naira issued to Django Limited had not been presented for payment. C. A check for 3,000 received from a customer in full settlement of a debt of 3,300 naira had been entered in the cash book at the full value of the debt. D. A dividend for 6,500 naira from PZ Limited had been paid directly to the bank. Now, E. The bank deducted a total of 125 naira as its charges. F. The bank had credited a check of 3,560 of V. Amaka in error to T. Amaka's account. You're required to prepare adjusted cash book and bank reconciliation statement for the month of March 1999. Now remember that in my previous classes, if you've been following, you were told, or I mentioned, that the bank reconciliation statement is just trying to agree the balance in the bank statement. Your bank statement is the statement that the bank has sent to you showing how you operated the account. Your cash book is your own record, as the bank is debiting you for payments made or crediting you for money paid into your account. You are crediting your cash book for payments made and debiting your cash book for money received. So basically, at the end of the reconciliation period, okay, you're expected to have the same balance that you have in your cash book to be the same balance that you have in your bank statement. But because of the fact that it is very possible that the balance that the bank statement will be having will be different from the cash book balance, that is why we prepare the bank reconciliation statement. So you must note as well that your cash book remains the same. You're debiting when you're receiving, and then you're crediting when you're making what? Payment. Now the bank, what the bank does is that when money comes into your, or money goes out of your account, the bank will debit you. When money, comes in to your account, the bank will credit you. So what it means is that whenever the bank is debiting you for money going out of your account, you are crediting your what? Cash book for payment. Whenever the bank is crediting you for money that comes into your account, you are debiting your what? Your cash book for money that you're receiving into your what? Account. So basically, where you now have bank reconciliation is where the cash book balance is not agreeing with the bank statement what? Balance. And then this question gave us the reasons for the differences. So what we're expected to do is to adjust the cash book and prepare the bank reconciliation statement. So the first thing there says we should prepare what? The adjusted cash book. So who owns the business? T. Emeka owns the business. So what I'm preparing, the first requirement says what? Prepare the what? Adjusted cash book. I told you your cash book is still your cash book. Your cash book is still your cash book. So there's really no nothing. So we can have here let's call it the description, and then we have debit for what? For money that comes in receipts, okay? And then we have our what? Credits for money that goes out, that's payment. So basically, we are trying to what? Adjust the cash book. So what we are saying is that first thing first, we must know what is the balance that the cash book is having before we actually got the bank statement. So the question is saying that what? T. Emeka maintains business bank account with Second Bank Nigeria Limited. The bank statement received for the month of March 1999, the reconstruction period is March 1999, showed a balance of 14,265. That means the bank statement is showing a credit balance of 14,265. While the cash book of what? Of T. Emeka is showing what? What they call 13,380. So basically, what we are going to be looking at now is to get the balance from the cash book based on the question. So we have our what? Opening balance here. Remember, your cash is an asset. Assets have debit balance. So basically, you should remember those principles I taught you in what? Double entry for asset, liabilities, income, and expenses. You can go to janusconsult.com to take those topics on assets, liabilities, incomes, and what? And expenses. So basically, the balance brought forward here, based on the question, they said that T. Emeka's cash book is having 13,380. 13,380. Now, they now said that what the investigation revealed that a two check for A011 for 3,400 and X22419. So as I was saying, two checks, A011 for 3,400 and X22419 for 6,000, deposited into the bank on 28th March, were not credited by the bank until 2nd April. So basically, what we're saying is that what? T. Emeka paid an amount of money into his bank account, but the bank did not credit him until the following month. Remember, we are reconciling March. So the money didn't come in until what? April. So within the March, which is the what period of reconciliation, that value is what we call uncredited checks. Okay, and uncredited checks, if you have gone through our topic for or our class for bank reconciliation statement, is usually used in preparing the bank reconciliation statement. So we have that. So the second one said a check for 6,500 naira issued to Django Limited has not been presented for payment. So what that's saying, T. Emeka gave a check to Django Limited, but Django Limited has not gone to the bank to collect the money. So basically, that's what we call unpresented what? Check. So that will also be utilized in the what? Bank reconciliation statement. So the next one is C. A check for 3,000 naira received from a customer in full settlement of a debt of 3,300 has been entered in the cash book at the full value of the debt. So what they are saying is that T. Emeka received a check from a customer. The customer is owing T. Emeka 3,300. Okay? Then the check that was received is 3,000, but T. Emeka has recorded 3,300 into the cash book. Remember, your cash book, when you receive, you debit, when you pay, you credit. So they are saying that T. Emeka had what? Recorded a receipt of what? 3,300 instead of what? 3,000. So basically, you have overstated your what? Your receipt by how much? By 300. So if you have, for instance, let's say you have cash account. Now you are supposed to enter 3,000, but you enter how much? 3,300. So what we expect to have here is what? Remember, this side is debit, this side is what? Credit. What we expect to have here is 3,000, not 3,300. So we have to find a way to what? To deduct 300 from this what? Account. So how do we deduct? We credit. So if we're crediting here with 300, it means that when we balance the account, we will have 3,000 coming in. So let's try. That means we're going to have a carry down here of how much? 3,000. So both sides becomes equal to be 3,300. 3,300. So the new balance, which will be a brought down, will now be how much? 3,000. So we now have our 3,000 corrected. So in order for us to correct this error, okay, we have to credit our cash book with how much? 300 naira. So let's go. So we're going to say what? Receipts, okay, receipt over stated, okay. So we credit with how much? 300 naira. So the next error there said what? A dividend of 650 from PZ Limited had been paid directly into the bank. So it means that what? They've paid the dividend into the bank directly. But T-Maker is not aware until you got the bank statement. And I told you, when money goes into your what? Into your bank, the bank credits you. So you're expected to debit your cash book. So if the bank has credited you and you have not recorded it in your cash book, remember that's a receipt. PZ is paying T-Maker, so T-Maker is receiving some cash from what? PZ. So remember in your cash book, when you are receiving your debiting, when you're giving your what? Credit, when you're paying your crediting. So let's go. We have dividend of how much? 650 naira. So the next one says the bank deducted a total of 125 naira as its charges. That's bank charges. So the bank has debited the bank statement. That means Emeka is paying for bank charges. And remember, when you pay out of your cash book, you're crediting. When you receive, your debiting. So if Emeka is paying bank charges, that means the cash book has to be credited. But he has not done that because he has not received the bank statement to know the bank charges. And when you got the bank statement, there was a debit of what? Bank charges. So basically, we are going to what? Have to what? Record what we call bank charges. So we have bank charges to be how much? How much is that? So the bank charges, I said, is what? 125. So what is the next? What's the next thing that they said? The bank had credited a check of 3,560 of V Amaka in error to T Amaka's account. So this is not Emeka's error. It's the bank that is making such what? Error. So we'll find a way to adjust it in the what? In the bank reconciliation statement. That means there's an amount of money that has been credited to what? The account of T Emeka by the bank that needs to be reversed. So basically, these are the items that will affect the what? The adjusted cash book. So since we have adjusted the cash book, let's get our new balance. So let's go. We're going to say balance carried down. So how do we get the balance carried down? We add total in the debit, total in the credit, and then deduct. So what's the total that we have here in the credit? From my calculation here, the debit side and the credit side. So what's the total in the debit? So the total in the debit side, now we have 0 plus 0, we have 0. 8 plus 5, that is 13. Okay, 1, we carry 1. 6 plus 3, that's 9, plus 1, that's 10. 0, carry 1. 1 plus 4, 1 plus 3 rather, that will be 4. Then we have 1. So here we have total debit side is what? 14,030. Then the total in the credit side here will be 425. So let's deduct. So here we have 10 minus 5 will be 5. 2 minus 2, that will be 0. Here we have 0. 10 minus 4, that will be 6. Remaining 3. We have 3, 1. So that's 13,605. So our balance carried down here will be 13,605, which means that our new balance after adjusting the cash book would be what? 13,605. So basically, we have amended the cash book or adjusted the cash book to have what? To get a new balance. Okay, from 13,380 we identified the issues affecting the cash book, adjusted the cash book to now have a new balance of 13,605. So after adjusting the cash book, what we prepare is the what? Bank reconciliation statement. That's what the question is saying we should prepare for the second requirement. So we have two bank reconciliation statements. Okay, as what? That will be 31st March 1999. So let us prepare our bank reconciliation. So what do we have? Balance as per the cash. That's the new balance the cash book is having. Balance as per adjusted cash book. What do we have? 13,605. 13,605 naira. So what do? We have add what? Add unpresented checks. I already explained this in the full class. You can go to jadosconsulting.com to take the full class on bank reconciliation statement. You will understand a lot of terms there. So unpresented checks. What are unpresented checks? They are checks that the business has issued towards vendors or individuals, but at the time we are reconciling, they have not taken the check to the bank. So that might not really reflect in the bank statement. So what is the unpresented check here? The question is saying that a check for 6,500, that's B now question, investigation review B, a check for 6,500 issued to Django Limited had not been presented for payment. So we have 6,500. Okay, so if you bring it here, we have 6,500. So let's add up. 5 plus 0 will give you 5. 0 plus 0 is 0. 6 plus 5 is 1. Okay, that's 11. 1, then 6 plus the 1, that's 7. 7 plus 3, that's 10, that's 0. And then 1 here, we have what? 2. So we have 2105. So what's the next thing we do? You less uncredited checks. What are uncredited checks? These are checks that the bank, the business has received, but they've not got value for it as at the period of what reconciliation. So the question says 2 checks, A0011 for 3,400 and X22419 for 6,000 deposited to the bank on 28 March 1999. Now we are not credited by the bank until 2nd April. So what do we have? The first check, we have A00011 for what value? The question says 3,400. The next one is X222419. X222419. That's the check number. For how much? 6,000. 6,000 naira. So when you add, what do you have? 9,400. So we are lessing what uncredited checks. So let's deduct. So 5 minus 0 here is 5. 0 minus 0 here is 0. What do you have here? 1. So 11 minus 4, that gives you what? 7. 11 minus 4 is 7. And then here we have what's remaining? 9. 9 minus 9 here is 0. So here we have 1. 10,705. So remember, there was an error. Okay, that's about the last investigation. They said that what? There's a value of 3,560. Okay, that was actually credited in error to T. Emeka's account. So what we're saying is that what the value of 3,560 was supposed to be credited to V. Amaka's account, but it was credited in error to T. Emeka's account. So T. Emeka has an amount of money that has gone into his account that does not belong to him. So that is causing the difference between the bank statement balance and what cash book balance. So we have to what identify that as what as a reconciliation what item, so that the following month we will know that it is expected that the bank will reverse it. So basically, what's not yours, the bank is going to reverse. But in this period of reconciliation, that money is sitting there in the bank statement, and that will increase the balance that Emeka is having. So we have to recognize that as an inflow. Pending when the bank will reverse it. So basically, the error here says that the bank had credited a check of 3,560 of V. Amaka in error to T. Emeka's account. So Emeka has the value that does not belong to him. So let's recognize that since it is a value within the reconciliation period, although the following month the bank will reverse, but pending when the bank reverses, let's recognize that there was what? A credit into his account. So we're going to say what? Addition of what? V. Amaka's credit. So what's the credit there? 3,560. So we have 3,560. So let's add. 5 plus 0 is what? 5. 0 plus 6, 6. 7 plus 5 is 12, right? And 2. Carry 1. 1 plus 3 here is 4. So we have 1. So this is what we call the balance as per bank what? Statement. So basically, under the analytical condition, this will help you to know that what you have arrived at the right what answer. Because basically, even in practice, our aim is to what ensure that we know the item that is causing the difference. Okay, so at the end of the preparation, we expect to have the same balance that the bank statement is carrying. So based on this question, the bank statement is showing the balance of 14,265 naira. Okay, based on the question is saying that what the bank statement showed a 14,265 naira credit. So basically, our bank reconciliation statement is giving us what 14,265, and that is what our bank statement is what showing. So this is how to prepare a bank reconciliation statement. So basically, you can go to jadosconsulting.com to take a full class, a comprehensive class on bank reconciliation statement, or get my my book, okay, Jad's Business and Financial Accounting, to actually read and understand. If you have questions, you can drop questions in the comment section up there to reply with the right answers. You can give someone my book as well by sponsoring copy, 6,500 naira per copy or $11.5 US. But you can order for yourself for 7,000 naira per copy or $12 US. Thank you.